what's the state of the economy, what's the state of America, the stock market, everything. That's going to be the subject of this video. Now, I'm driving, so then I had nothing else better to do, so I thought I might as well make a video on this, so I don't have to do it at home. Anyways, so a lot of data came out in the past few days. So that's like CPI numbers, job report, and just looking at there's a lot of earnings, a lot of those things I want to touch upon. And I guess too long didn't watch, if you're just gonna watch that much. I think that we are long-term bullish, short-term capped bearish, if that makes sense. And I'll explain what I mean right now, I guess. So a lot of data came out, and I just want to put my kind of what's the word? Put on my thoughts. So regarding the CPI numbers, so CPI numbers were lower than expected, which is bullish thing, right? We're basically saying that inflation isn't as bad as we thought it might be because of tariffs or whatever. Now, the problem with that, in my opinion, right, the stock market actually rallied that day, and the problem with that specifically is you haven't seen the effects of tariffs yet, right? But a lot of people in Q1, they mass imported so many things. That's why GDP numbers were actually higher or lower than we expected, because we imported so much stuff that the consumer hasn't actually seen the effects of those tariffs yet. Weirdly enough, right, ironically, we actually have started seeing those effects of tariffs, mainly not so much tariffs specifically, or like actual tariffs, but the emotional kind of like the sentiment of those tariffs. We've seen those effects, right? And those effects have actually caused inflation to go down. What do I mean by that? So if you look at the CPI numbers, there's a few things that really stood out that I feel like people haven't actually, not that they haven't noticed, but that they haven't put enough weight into. Namely, one, you see travel and that entire sector, that sector just almost like it deflated. The numbers came in lower than expected, right? So there was a deflation actually. So it deflated, right? Basically, people aren't as inclined to travel to America, to go to America and do those things, right? So for example, the cruising industry, those prices have been going down, right? Flying has been going down, right? Travel in general has been deflating in the past quarter. Why? You see Canadians, Europeans, they're not, like Asians, they're not going to America, they're going elsewhere, or they're just choosing not to come. The other thing that also fell in price, well, first of all, eggs. I mean, like, the only reason eggs were up in price to begin with was because of the bird flu, right? So I honestly don't see that as something that important. But then food in general has deflated, and I think that's also kind of a signal to see the global sentiment, right? You see, like Canadians, other countries, they're choosing not to buy American goods. What happens when other countries aren't buying American goods? Well, demand goes down for those American goods, and then basically, in order to keep up that volume, those American goods have to lower the price to increase demand from domestic purchases. For example, I know that a lot of Canadians, or I know that a lot of alcohol producers have to lower their prices because they're not selling in Canada anymore. And you can see, like, for example, China not buying soybeans from America anymore, maybe even crabs during New Year's or whatever. You see all those things, and that's something that I think that we have to look out before. When we're reading those numbers, it's not a good thing. It's not simply just a good thing because the number down, right? There could be a lot of things that we are overlooking. The other thing is that people kind of related to CPI and tariffs. There was a big rally when Trump announced the 90-day pause, right, on the tariffs. I think that could actually be a bad thing. Number one, we didn't eliminate tariffs. We actually increased tariffs to 30%, including the fentanyl tariff and the 10% universal tariff. Now, we haven't seen those effects yet. And just because we paused the 100+ tariff, which everyone knows was not going, like, that's just so not sustainable. You're effectively self-embargoing yourself. right? You're effectively banning yourself from trading if you have a 100+ tariff. A 30% tariff is still really impactful, and it's still going to devastate small businesses and even medium and big size businesses, right? So that's one thing. But the other thing is that something I mentioned before is you haven't seen the effects of those tariffs yet, right? You've only seen kind of the psychological and like kind of like the consumer sentiment or like global consumer sentiment. You haven't seen those effects yet because we did so much importing in Q1, right? You'll see those effects Q2, Q3, Q4. Now, going on to the job report, right? I think the job report was actually really good. Now, regarding job report, you saw that there was increased. I just think that the overall kind of privatization of a lot of global government agencies is actually a pretty good thing, because you just have more innovation, in my opinion. You have more drive, you have more innovation when it's a private sector doing it, because they have more on the line, right? They're worried that their business is going to fail, versus someone that just kind of working at the government, they kind of it's just a different kind of mental drive, right? That's my opinion. So I just think it's actually pretty good. You can see those effects because you see increased spending on private kind of like government or security companies. For example, hiring Rocket Lab, hiring Spire Global, all those other defense spending, right, on private sector, on private companies, rather than kind of just doing it all in-house in the government. The other thing is also you see an increase in private teachers, which is actually pretty cool. I think that's pretty cool as well, because I think that overall that's a really good thing, just because look at how like you see government's sponsored education and how complete garbage it is, right? Like you hear all these horror stories of like tenured professors, tenured teachers that are just there because they've been there for a while, not because they're a good teacher. So I just think that overall it's actually a pretty good thing long term, that we're kind of setting the foundation for getting more private companies to be able to, because think about it, right? When you have a bunch of private companies, then there's a much greater need to innovate. There's a much greater need to improve your product, because you're going to have competition. If you're the government, you don't really have that competition, that's just my opinion. So those are just some thoughts on those two numbers. Now, what I call a capped bearish. The reason I'm capped bearish is because sentiment is a really important thing when it comes to investing, right? There's the reason why the sin companies such as like tobacco or alcohol, usually they don't demand that high of a premium, because people don't feel good investing in them. They just don't feel right investing in those companies. Now, if you have, instead of a sin company or a sin product, you have a sin country, right? For example, I'm sure a lot of Canadians have pulled out of investing that's not the right word. A lot of Canadians have pulled out of investing in America. Maybe a lot of Chinese people, a lot of Europeans, just because they don't like what's happening in America, right? But on the same end, even though you have that selling, you actually also limited the amount of shorting because of how unpredictable Trump is. Think about it. If at any moment you could have Trump just issue some like, oh, we're retracting all tariffs, right? Then anyone that's shorting the markets, they would be completely screwed. Exactly what happened back in, I want to say, at the bottom of the market in April, right? When like all three markets rallied like more than 1,000 points in a day. That's crazy. And like no one wants to be on the receiving end of that, because if you short, it can only go down to zero. If you're long, it can go up to infinity. So no one wants to have that type of asymmetrical risk. So in my opinion, Trump being unpredictable is actually pretty good for removing shorters out of the market. But that doesn't change the fact that there might be a global outflow of people not necessarily shorting the market, but just selling what they already have. So I think that at that point, the American market might actually trade at a lower multiple, but they won't trade under fundamentals. That's my opinion. Again, I'm still trying to remain bullish. There are a lot of things that you do have to account for, and there's a lot of uncertainty. Just make sure that your investments don't expose you to an asymmetrical downside. In other words, make sure that you are investing in a way that doesn't cap your upside, but it definitely caps your downside, so that even if like you lose the farm, you only lose the farm. Right? So those are my thoughts. I don't know. So what do you think about the markets? What do you how do you feel about the current situation of things? Let me know in the comments down below. Peace.